Markets so far, they have been ignoring any rhetoric that we've been getting out from the Fed for the most part, also ignoring the action that we're seeing in the bond market. The gains that we've seen since the start of the year, do you think that momentum can continue if, in fact, inflation does remain pretty sticky, which it seems like it's going to?
I know it's hard for investors to see those charts going up and up every week while you got money on the sidelines. By the end of 2022, you'd licked your wounds on the losses. You said you were done with that risky, unprofitable stuff. And now look at it.
I think crypto is driven by the same thing of what drives the technology markets.
Well, let's get you up to speed on Bitcoin, because take a look at that. Price is moving even higher again today, up another 6%, touching the highest level that we've seen in months.
The current surge in the trading volume of Bitcoin has led many investors and traders to speculate where its price is headed and what the future holds for this highly volatile asset. Many people are wondering if we are finally in a crypto spring. With Bitcoin and Ethereum prices seeing positive momentum since the start of the year, respectively, could the crypto winter that decimated the market in 2022 finally be thawing? In today's video, we'll see what Raoul Pal thinks of the ongoing crypto rally. He discusses how Bitcoin is affected by Fed rate hikes and what investors should do. To know more details, stay tuned till the end of the video. And before jumping forward into the video, be sure to subscribe to my channel for the latest videos on economy, crypto, and market trends.
It's all about how you take risk and what kind of risks you want to take. But I do, and I'm very much involved with that market because I think technology adoption is driven by something called Metcalfe's law. So it's driven by a different way of valuing things, which is the number of people on the network and the number of connections or activity on that network.
Yes.
So it's like a mobile phone network and the internet itself. But unlike anything else, you can actually own a part of the network, which is what crypto does. So it actually, once there's liquidity, it's actually driven by the Fed liquidity cycle as well. It's in a secular bull market. So a long-term log trend of Bitcoin just goes up, but it's got these wild swings. And those are driven by the Fed liquidity cycle. So when global M2 is falling, crypto falls. When global M2 is rising, crypto rises. Same with technology stocks. So it's exactly the same thesis, what drives these things in the cyclical sense. And much like technology, there's a secular tailwind. And we've seen that rise of technology, something I've been talking about, I call it the exponential age, which is the nexus of a whole group of technologies, from crypto to AI to robotics to EV to distributed computing to Internet of Things to many, many of these things all are happening together at the same time. And people like, Raoul, you're talking nonsense here. We don't see any of this stuff. And then ChatGPT comes on and everyone goes, oh my God, that was the fastest adoption of technology in all history was cryptocurrency. Mm-hmm. This went from 0 to 11 million users in 20 days. We've never seen anything like it.
Raoul Pal highlights how Bitcoin, like other tech stocks, are highly driven by Fed decisions and big economic reports. All of these give wild swings to the crypto market, but still, Bitcoin jumped to its highest since August in the post-Fed crypto rally. Raoul Pal also highlights how crypto was the fastest adoption in the history of the tech sector and believes that a great amount of adoption is waiting ahead. We have just seen the best January and February in the short history of cryptocurrencies, with the value of Bitcoin reaching above $25,000, especially after how Bitcoin prices fell in November after the FTX fallout. But now, once again, the situation covering crypto space is looking mighty pretty. The trading volume for Bitcoin as well as other cryptos has increased over the past week. We can truly say that the crypto market is a highly volatile one, with prices fluctuating rapidly and often unpredictably. Let's get into the next clip to hear more from Raoul Pal on this matter.
I think crypto is driven by the same thing of what drives the technology market, so the liquidity. So liquidity's turned in technology, it's turned in crypto. I think we're in crypto spring, is the point. So I think, if we look back to other crypto springs, it tends to do a lot, 100, 200, 300%, corrects for a while. And, when we get to the stimulus cycle, eventually it starts rising again. So that's driven by the liquidity. The adoption side of the equation, well, we're waiting for, okay, what's the next thing? Even the CEO of Microsoft said, it's coming. The ChatGPT moment is coming in crypto. We just don't know which one it's going to be. Like, we knew AI was coming, and then when it came, we were all shocked. So I know, I deal with a lot of corporates in the space, financial investors in the space, banks are in the space, governments are in the space. So everybody's coming. The UK is going to roll out central bank digital currency. Singapore, India's rolling one out. So it's happening everywhere. The US is a bit slower on some of that stuff. So I think we're going to see a lot of these applications coming. This crypto winter was interesting because a lot of the VC companies have poured a lot of money into businesses who over crypto winter have been building. So what we'll see coming out the other side is new projects, like we saw NFTs and DeFi out of the last cycle. So what are we going to see here? We'll also see probably another rise of DeFi. So I think the adoption still continues.
Bitcoin is burning the breeze by touching 25,200, which has produced breakout signals across various on-chain indicators. As such, the blockchain market can expect prices to rally for the remainder of 2023. I mean, in the past few weeks, the crypto market has seen a lot of good momentum. Bitcoin prices are finally starting to rebound. 2022 was upsetting in many ways. Bitcoin fell sharply in value. The plunge wiped out billions of dollars of value in the cryptocurrency market and raised doubts. And many investors kept their money on the sidelines after losing a great time. Bitcoin has bounced back from the starting of this year and is now trading at around $24,300. That has some investors wondering if it's time to get back into the market. Well, of course, it's not without risks. So, is it a good time to invest? If so, what principles should be followed to become a successful investor? Let's get into the next clip to hear Raoul Pal's advice for all the investors out there. Also, before jumping ahead, be sure to give a big thumbs up to this video.
I think everybody in markets learns lessons, and you don't become an investor until you've learned the lessons. And usually the lesson is to not be a trader because it's hard. And I understand the reason why they'd rather buy lottery tickets than invest, because the S&P maybe over the long run gives 8% returns. Well, 8% returns from their savings just isn't enough to move the dial. So I understand it, but there are ways or markets to look at. You better look at markets that have better potential risk rewards over a longer term. So things with a secular tailwind, whether that's cryptocurrencies or economies like India or even technology. And then don't use leverage, but just accumulate those things, and they will move a lot more over time. For example, going back to that 2018-19 example when the Fed paused last time, so the S&P was up about 10%, the NASDAQ was up about 14%, so that's a significant outperformance. The kind of long growthy end of technology was up about 24%, and crypto was up 100%. So you can choose to back a horse where you don't have to use leverage that acts like leverage. I saw somebody recently did some research, and again, these are not recommendations, but Tesla basically trades like a 20x leveraged S&P. Okay, that's interesting. If your view is that Tesla's not going to go to zero, then you get a lot of upside if you think the market's maybe in a bull market for a period of time. And there are other stocks that act like that. So as opposed to taking leverage and short-term bets to hope to win with a lottery ticket, maybe construct a portfolio, and that might make a real difference to you over time, because you can stay in the game that way. Because as you alluded to, the problem is if you trade options, be out of the game. You've lost your premium, you're out of the game. You can miss out on moves. But if you can actually invest in the underlying, hold it and find the right bets, okay. And that requires a bit of homework.
The first and most important principle is to think long-term. Another important principle is to diversify your investments. This simply means not putting all of your eggs in one basket. For example, don't invest all of your money into a single asset class. Raoul Pal advises that, if you are looking to get into the market, you should invest and not trade. An investor is somebody who has made a commitment to grow their wealth over time. They have learned the lessons the market has to offer, and they are not afraid to hold on to their investments for the long haul. On the other hand, a trader is someone who is looking to make a quick buck. They are often willing to take on more risk in order to achieve their goals. The next thing is never, ever leverage, especially to trade. So what do you prefer, trading or investing? Do you think we have entered a crypto spring? Is it a good time to enter the market? Can we see more Bitcoin highs in 2023? Let me know your thoughts in the comments below. For more videos like this, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. I'll see you guys in my next video. Adios, and thanks for watching.